Hi, I'm Ross Mayfield, investment strategy analyst at Baird, and we are back for another weekly update with our friends at Strategas. Today, I'm thrilled to be joined by Managing Director and Washington Research Analyst Jeannette Lowe to talk all things Washington. Jeannette, how are you doing today?
I'm doing well, Ross. How are you?
I'm doing really well. Thrilled to have you here at the start of, what will be a really consequential year and a lot to get to in policy world. But let's start with something very near term, which are the odds of a government shutdown in the next month. And if you could just give us the most recent update as we record on Thursday morning here.
So that's right. So we have a potential for a partial government shutdown at the end of next week on January 19th. And so what we had is over the past weekend, congressional leaders reached a deal on top line budget appropriations for FY24. They still need to actually write the appropriations bills that then need to be enacted in order to fund the government. So we have two funding deadlines, January 19th and then February 2nd. None of those bills are probably going to be ready by January 19th. So there is the need either to pass another short-term continuing budget resolution to give lawmakers more time to pass a budget, or there's a risk that we could go into a government shutdown. If we do one on January 19th, it would be a partial government shutdown because only the agencies that are funded under the four bills that have been pulled to that deadline would be affected, but then we would still have another one potentially coming in on February 2nd. So right now, I think most members of Congress would like to do a continuing budget resolution and avoid a shutdown, but there is still a risk out there that we could see at least a partial one, just because conservatives have been quite upset with the Speaker of the House over the deal that he made with Senator Schumer for these top line budget numbers. So there is that risk as we look forward into the next week.
Yeah, and obviously highlights the kind of ongoing concern about kind of just the mismatch on where both sides are on the budget and where spending should be. But pivoting from there, there's actually negotiations going on, a lot of activity in Congress right now for a pretty large tax cut bill that would get done this year. Could you go into detail about what's in that and outline the possibility that something gets passed there?
Right. So there are negotiations going on between the chairman of the House Ways and Means Committee and the chairman of the Senate Finance Committee. And they are trying to do a child tax credit expansion deal that would be paired with the expansion of expired business tax credits. That would be the R&D tax credit, maybe allowing for full expensing and not having to amortize expenses over 5 years. It would allow for a larger interest tax deduction for businesses, and it would allow for full expensing for capital equipment expenditures. So all of these pieces would be paired with an expansion of the child tax credit, which is something that the Democrats are looking for in this election year because they want to boost personal, real disposable personal income that would then help consumers as we move into potential softness from economic slowdown, or just to keep the government, to keep the economy doing well ahead of the election. So these two pieces would be paired together. It's looking currently that it would be about a $70 billion tax package. And it would be paid for by the pulling back of some of the employee retention tax credits that have been distributed since the COVID-19 pandemic. One of the things that's interesting about this is that there was a significant amount, about $150 billion worth of these tax credits that were put into the economy last year. And we actually saw a significant rise in GDP expectations when those refunds came out. Those were paused because of fraud concerns by the IRS, but there was the possibility that they could have been restarted in the current year. And that was something that would also be looking at as potential fiscal stimulus in this election year. But this could be now pared back if they end up being a pay for this tax deal that negotiators are trying to get done. The deadline that they're looking at, though, is January 29th, because that is when tax season actually begins. And so they want these things to be retroactive. And so they're looking to get it done before the end of the month. So there's a really tight timeline here to try to get this done. It's not a done deal just because there's a lot of dynamics going on in Congress right now, again, over what we just discussed with the budget and with a whole host of other concerns. But this is something that we are watching quite closely. It would provide some boost to the consumer, but then would also provide some business tax relief by getting some of these deductions restored.
Yeah, and obviously you guys have spent a lot of time pointing out that how the economy does in the couple of years leading up to a presidential election has a major impact on whether an incumbent wins or loses. And so we'll be keeping an eye on that. Juice the consumer obviously has been a big driver of economic growth over the last couple of years. So Jeannette, thank you so much for the near-term update. We'll certainly have you back on to talk about the longer-term outlook in the presidential election at some point in the next few months. But I want to thank you so much for the time today.
Thank you. Appreciate it.